This presentation is for Chapter 2, Job Order Costing. In Learning Objective 7, we are going to learn how to calculate job costs for a service company. Although service companies don't have inventory or manufacturing costs, they can use job order costing. The first step they would need to do is to trace their direct labor to their jobs and then allocate overhead costs to the jobs using a predetermined overhead allocation rate. So the overhead allocation rate will allocate their indirect costs to their jobs. After the companies determine the total cost for the jobs, they can use that information to help them make better pricing decisions. So for this learning objective, we are going to use a fictitious law firm, Walsh Associates. To determine the per hour direct labor cost, we're going to use as an example one of their attorneys named Fox. So Fox's salary and benefits total $100,000 per year. And if you assume a 40-hour work week and 50 work weeks in the year, that would give Fox 2,000 available work hours per year. So how would we calculate Fox's hourly pay rate? We would take the total salary and benefits of $100,000 and divide it by 2,000 hours per year, and that would give us a $50 per hour cost for that employee. Next, Walsh also wants to be able to allocate their indirect costs to their jobs. This slide shows the total calculation for indirect costs for the year 2024, and we can see that it consists of their office rent, their support staff salaries, maintaining and updating their law library, advertising, and office supplies. So we're now going to look at how do we allocate those total indirect costs to the jobs. This slide shows how they would do that by calculating a predetermined overhead allocation rate. So let's say that there are 5 attorneys in the firm. They could be expected to work or have 10,000 direct labor hours for 2024. So we would take the $300,000 of estimated indirect costs and divide that by the total estimated direct labor hours of 10,000, and that would give us a predetermined overhead allocation rate of $30 per direct labor hour. The next step would be to allocate that to the job. So if a job had 14 direct labor hours, we would multiply 14 by 30, and that would allocate $420 of overhead to that job. So let's look at how total costs would be assigned and allocated to a particular client. So if 14 direct labor hours were used for that client, we would multiply 14 times 50, and that would give us $700 in direct labor costs. Then we would take the same 14 hours and multiply that by that predetermined overhead allocation rate of $30 to allocate $420 of indirect costs to the job. Adding those two amounts together, we get total cost for that job of $1,120. We can also see how to make a pricing decision for using our job order costing information. So if the total hourly rate for the company is $80, which consists of $50 per hour for direct labor and $30 per hour for indirect costs, we can add to that a markup. So if the company wants to make 75% in profit above the firm's cost, we would multiply 75% by the total cost per hour of $80, and that would give us our markup of $60 per hour. So the price that we would charge our clients would be equal to the total cost per hour of $80 plus the markup of $60, which would be a total of $140 per hour. And of course we would multiply that by the number of hours that we worked, and that would equal the total price that we would charge the customer. And that is the conclusion of the presentation for Learning Objective 7.